Okay, so good morning and welcome to Your Credit. My name is Liz Hart. I'm the founder and executive director of Tailored for Success. Tailored for Success is a nonprofit organization that provides customized workforce development services to job seekers of all ages and genders. Our services focus on building self-confidence in our clients by educating them in the most current interview preparation strategies, holding webinars focusing on soft skills that are in high demand by employers, and giving them access to free, high-quality business clothing in a supportive atmosphere. Today's webinar is part of our Reimagine Your Career webinar series, a monthly webinar series on topics of interest to all job seekers. This webinar will be recorded and shared along with handouts after the presentation. I'm happy to be partnering with PNC Bank today to bring this webinar to you. If you have general questions during the presentation, please feel free to ask. I ask that you leave your video screen on, but just stay muted during the presentation. But our presenter has graciously allowed us to have a very interactive presentation today, so feel free to ask questions as we go along. We'll also have time at the end of the webinar for question and answers. So it is my pleasure at this point to introduce Spencer Guillemette, Vice President, Community Development for PNC Bank. Spencer has graciously offered, along with his team, that if anyone would like a one-to-one to discuss specific issues relating to your credit report, you can reach out to Spencer directly, and I will put his information in the chat. So at this point, Spencer, the workshop is yours, and thank you so much for being here today.
Thank you very much, Elizabeth. Thank you, everyone, for participating. I know your day is very important to you, but to give it an hour to this session, it's gracious, and I'm happy for that. Just to introduce myself, my name is Spencer Guillemette. I am the Community Development Relationship Manager for PNC. I've only been with PNC for 5 months, but prior to PNC, I worked with JP Morgan Chase. I was a branch manager for JP Morgan Chase. I worked for Santander and also HSBC with their community banking and commercial banking. So as a community development manager, what my job is? My job is to act as a bridge, connecting the community with the bank. What we do, we provide loans, investment, as well as grants, sponsorship, and obviously the financial workshop that we're doing today. So I'm excited. We have an agenda packed of information to share. I'm not the type of guy that like to go slide by slide. We have about 44 slides in the presentation. But what the agenda is to go over the presentation. My objective is to answer all the questions that you may have, because this workshop is for you guys, and then it will be more fun and rewarding if I could answer a question that is according to exactly what you want to get out of this workshop. I'm excited, and then all I ask of you guys is to participate, because again, I could speak all day, but again, when you participate, it makes this whole presentation fun and ready to go. Now, I suppose the objective concern, if you could go to that slide real quick. We got it, yes. So there are quite a few things that we're going to cover throughout the presentation today. This is a credit workshop. So the first thing is to define credit. The second thing, explain why credit is important. Describe the purpose of a credit report and how it is used. Other copy of your credit report, which is extremely important. Read and analyze your credit report. Not most of us know how to do that. Differentiate between good and bad credit. Next, describe the implications of good and bad credit score. Identify ways to build and repair your credit history. Recognize how to correct errors on your credit report. And lastly, recognize how to guard against identity theft. So it's a lot of stuff, but let's get right into it. The first question I would ask: what is credit? Does anyone know what is credit? On your own term, in your own language, define what is credit. Anyone wants to participate to answer that particular question? What is credit?
I would think credit is to allow you to buy things or purchase things without having their cash available.
That's good. That's pretty good. for me, the slide says something, but I just want to I summarize it to a very simple term, and I'll give you an example of a simple credit transaction. What is credit? To me, credit is your ability to borrow and your obligation to pay. It's that simple. Your ability to borrow and your obligation to pay. A lot of people, they do the first part, but they don't do the second part, and then that's when it becomes a problem for them. So your credit is your ability to borrow and your obligation to pay. There are three categories of credit that are very important, and I think in our lifetime we get to one of these categories one way or the other. The first category is good credit. It's either you fall on the good credit column, the bad credit column, or the new credit column. So these are the three columns that, when you're looking at your credit report, you could take a look at it and say, hey, great, I have good credit based on the behaviors and the stuff that I've done to maintain it. No, I have bad credit based on the behaviors and the stuff I should have not done to get it to where it's at. Oh, wow, I don't have credit, so I need to start building credit. So these categories, anybody fall into that. Very important statistic, 2020, about 21% of our Americans have considered to have good credit. 21%. I don't know if that number when I read it, it was like, wow, 21%. What do they mean? That report come from Experian. What do they mean by that? 21% of Americans have a credit score of over 700 score. So that leaves for a large majority that falls under that. So that's when there's a lot of work that needs to be done for us Americans to basically educate ourselves with credit and to be able to get our scores and our credit history better. So this question that is posed right here, what do you know? What do you know or want to learn about credit reports? Because I believe each and every one of us have our own agenda, and also is somewhere either the bad, the new, or the good. So the question is posed to the people: what do you know or want to learn about credit reports? Anybody wants to help me answer that question? What do you know or want to learn about credit reports? It's gonna be a lot of questions because I like to pose the questions and then go to the topic.
Hi, Spencer.
Carol?
This is Carol.
Hey, Carol, how are you?
I'm good. So what I know about my credit reports is I can order them free one time a year from all three credit report agencies, Equifax, TransUnion, and
Experian.
Experian. Thank you.
Mm-hmm.
And what I'd like to learn about that is how to improve my credit score.
Great questions. We do have a slide that goes right into to answer that question for you. Anybody else wants to share? What do you know or what you want to learn about credit reports?
What I would like to learn is what to do and how to rectify if there's any mistakes on your reports.
We do have a slide for that. That's awesome. It's good. Anybody else? Abby, if you have any
I put mine in the chat, but thank you, Spencer. But I'd like to learn more about soft checks versus hard checks.
Soft versus hard. Awesome.
I'd like to add something to your list if I can.
Yes, please.
This is Christina. I would like to learn what advice you can give our college students who might be in their early 20s and getting credit card offers and things like that. Like, what is the best way for them to build their credit without having too much temptation to also build the debt?
I was once there, so I'll definitely be able to answer that question. I don't even need a slide to answer the question because I was there and I learned the hard way. So awesome. So let's go to the next slide real quick. What is credit? So that's defined right here: the ability to borrow money, sometimes called a loan, a promise you make to pay back money you borrowed with interest. So in a nutshell, that is credit. So it's a very simple example of what is a credit transaction. This is extremely simple. Person A, Eric, wants to purchase a new sofa. He then goes to person B, Jessica, to lend her $1,000. Jessica, who knows Eric very well, gave Eric about $1,000 with a condition to pay back in 90 days. In 90 days, Eric came very happy and with a check and also with a thank you note saying, Jessica, thank you. Here's your $1,000 that you gave me to purchase the sofa. And thank you. Now I have the sofa. I'm enjoying it. And then Jessica say thank you, and the transaction closed. So based on the categories that I mentioned to you guys earlier, where do you think that transaction will fall on the credit report? Is it good? Is it bad? Or is it new?
It's good. He paid back.
Good.
I'm sorry?
It's good.
It's a good transaction. So it's as simple as that. And when it comes to credit, you go to the bank, you borrow the money, and the bank give you conditions, and you meet the conditions. Once you meet the condition, it reports to the credit agencies that, hey, this person borrowed X amount of money, and that person returned that X amount of money at this particular time. The only difference is that Eric chose to pay the whole amount to Jessica because that was the condition. But with revolving credit or loans, sometimes the condition is not with that short, and you have minimum payment that you have to make. So it's extremely important to understand if Eric did not pay Jessica the total amount based on the condition, let's say it's 120 days past, let's say 6 months past, and Jessica is looking for Eric. Hey, Eric, I need my $1,000. And then Eric decided, you know what, I don't want to pay you. I don't have the means to pay you. Then that will fall under the bad credit category because obviously Eric did not hold to his promise to pay within the 90 days. So this is a very simple way to look at credit. So the next question, why do you think credit is important? I'm pretty sure that that it's right here on the slide. It is useful in times of emergency. It is convenient when you do not have cash. Not all of us, are privy or blessed to have a lot of cash in the bank. And sometimes you have to use leverage. And the way you do that is credit. It allows you to pay for large purchases over time. And I always say, it would be nice for me to purchase my home by going to the bank, take the $500,000 and say, hey, I want that home and pay cash. But if you're not privy to that particular lifestyle, the next thing you got to do, you got to leverage and use the bank to get credit to purchase your mortgage, such a large purchase as a mortgage or even a car. And lastly, it can help you obtain employment, housing, and insurance. I don't know if that strikes any one of you when I hear it will help obtain employment. Do you guys know that, bad credit can stop you from getting a dream job? Anybody?
Yeah, that's
a
good point, Spencer. Sorry, it's Liz. That a lot of job seekers don't realize that they need to clear up their credit because that could stop them from getting employment. And is it because if your credit is bad, your employer would think that you would not be a good employee? Is that?
No, I think it falls in the line of the type of job that you're looking for. Some jobs require some responsibilities. And part of credit is it looks at your character. So if you're a person that go and get loans from banks and then not pay it on time, and then you're looking for a bank job in which you're gonna be in charge of either lending people money or in charge of large sum of cash, sometimes the employer will look at you and look at your credit report and say, hey, this person doesn't have the character for that particular job.
Interesting. And in the chat, there's a question about does paying off my credit card in full each month negatively impact my credit card?
Great question. We're gonna get to that in a short while. So, but I'll definitely make sure I take a note and answer that question for you.
Excuse me.
Yes.
What exactly do potential employers, what can they view they view everything, your whole credit score? And then, how should I say this? Answer that question, and then I might have a follow-up.
Sure. Well, the employer do a full background check, and I don't know I just recently got hired 5 months ago, so I know exactly what was on the letter. They mentioned to you that they're going to do a full background check, and also they will be pulling credit. So pulling credit, that means that they have access to your whole credit history. And that could determine for them to make a decision based upon what they see there. Sometimes it might not be the score. It could be the credit activity, what they see there that triggers them. Okay, this is a bad character of that individual. But you have to sign and agree that, hey, they can't pull your credit, or they could do a soft or hard inquiry on your credit so that at least they could view your full background, just before they make the determination to give you an offer. Yes. Did I answer the question?
Yes, thank you.
Thank you. I don't like this particular scenario. I already gave mine, so you could move. you could go forward. What is a credit report? The answer is right here. It tells lenders who you are, how much debt you have, whether you have made payments on time, whether there's negative information about you in public records. So basically, that's what it does. So now the report agency are Equifax, Experience, and TransUnion. So those are three agencies that basically report the behaviors that you do when it comes to borrowing and paying back. And we're gonna go in detail to tell you what type of information that they look for. Right at the next slide, credit report information. Identifying information, credit history, inquiries, public record information. So that's what's in there. Also, judgments, unpaid tax liens, collections, and bankruptcy. So when you look at your credit, you're gonna see these information in there. If there is, the one thing you don't want to see, you don't want to see judgments. You don't want to see unpaid tax liens, collections, and bankruptcy. Those are never good to see in your credit. But the other information prior, everybody's gonna have them. So it's important to take a look at these things. And I'm pretty sure you guys know what are judgments. Obviously collections, and bankruptcy. I don't know if you guys want me to go over that.
Spencer, question. So you can get these things removed from your credit report?
Yes, you can. And we're going to talk about that later on. Yes, okay, definitely.
Perfect.
You can.
Thank you.
Sure, definitely. Obviously, it explains to you what personal bankruptcy of Chapter 13. Debtors keep all his or her property and makes regular payments on the debt. In Chapter 7, debtors must give up certain properties to the creditor. So we don't want to get into that particular category at all. And those are things that you don't want to see in your credit because it impacts you negatively. It should be, as it says, it should be your last resort. Bankruptcy remains on your credit report for 7 to 10 years and makes it hard for you to get future credit. So again, bankruptcy is a no-no when it comes to your credit. That affects it for a long time. Credit reports do not contain what information. So if you're not going to see your checking and savings account balance inside of your credit report. That's personal information. That's information people should not be privy of. Income, how much money you make, medical history, obviously those are privacy, they're privacy law for that. Purchases made with cash or checks, business account information, race, gender, religion, or national origin, and driving record. So these type of things you're not going to see in your credit report. Don't look for any place in them. There are no information when it comes to that. Credit report use. Credit reports are used to obtain loans, other credit, get certain kind of jobs, as you mentioned before, for housing, rental application, and mortgage, to obtain insurance. So now it's not only when you want to go and buy a house, they look at your credit. They look at your credit also when you try to rent a home. So you could see how credit affect your livelihood overall. It makes, it could stop you from just not only buying, but also just seeing an apartment that you love, and then they have to pull your credit and you get a decline because of your credit history, your credit report. So that shows you how important good credit is. Reason a loan application may be denied. I'm sure I'm going fast with this, and thank you, Elizabeth, for going slide by slide. Reason a loan application can be denied. Number one, no credit history. Number two, credit problems or poor credit history. So now let's talk about this a little bit with the question that was posed earlier with the college students and what kind of advice that I could have to for that. When you're first starting, school, you're 19, 18 years old, you're definitely not gonna have any credit history. The best way, I think, and the best way I advised my father and my grandfather to do with my brother was to add him or her into her credit report in her credit, one of their credit cards. For example, my father has American Express, with $10,000 limit, and my brother wanted to start, building credit, and we were looking at, okay, what's the best way to do that? And through research and understanding the whole credit world, the best way to get that done is by calling the American Express or whatever card it is and say, hey, I want to add this person as an authorized user. Now, authorized user meaning that it reports to your credit, but it could impact you positively or negatively. That's if the person who owns the credit card uses it responsibly. So I know my father used the card responsibly, pay the balance off every month or pay the balance, most of the balance off. So after 90 days or 6 months, that start, putting into reporting into my brother's credit. And now my brother has a good credit score. Now he has a lot of other card offers that come in to him so that, he could just go and apply himself and be the owner of this particular credit card. So I don't know if that answered the question for the person who addressed the college student situation.
Yeah, that's fine. Thank you.
Yeah, another way as well, when it's to get something called a secure credit card. A secure credit card, basically what it is, instead of the bank advancing you the funds, all you're saying is that, okay, I'm going to put $500 of my own money, and then I'll do the application. So basically, there's no risk for the bank or the credit card company, and then they give you something called secure credit card. Secure credit card reports to the credit bureau, some of them every 30 days, some of them every 60 days or 90 days. So what that does, you're using your own money as leverage, and then you're building your credit. With your own $500, you purchase gas, grocery, and you pay it every month responsibly. After a couple of months, that starts reporting your credit report. And then now, you show the positive report on your credit report. So that's another way to do it, either to be an authorized user on somebody's card or to open a secure credit card. Next slide.
Okay, Spencer, before we go on, does inactivity on your credit card impact your credit score?
There's a lot of things that impact your credit score. Now, if you have one card and then you don't use it at all, it does not impact your score positively, because usage is something that that helps your score. It all depends on how much you use of that limit. For instance, if you have a card of $1,000 and that's the only card you have, and you don't use it for 6-7 months, it's not helping your credit score whatsoever. At the same time, if nothing else happened in your credit, it's not hurting it. But the way it helps is if you have the 1,000 limit and then you use the card, let's say 10% of it, $100 every month, and you pay it off every month, it shows activity. And that way it shows that you're not living off credit, but you're using the credit as leverage, but not living off of it. So to answer your question, not using it has a lot of factors that we have to consider. Sure. Versus just saying you don't use it, you impact it negatively. No, there are so many other things that you have to consider. But if you use it, but you use it responsibly, it helps the credit.
Mm-hmm. And what about canceling a credit card? Can that hurt your credit score? And if so, how much?
Yes, it can. If you have a card that is in your report for 10 years, that card is helping your credit a lot, because it's showing that you have a card, you use it responsibly, and there's a part of the credit report that says credit history, which we're gonna see very soon. That helps your credit when you have a card that's on there for a long time. That means you establish relationship with a bank or a credit card company, and you have maintained that relationship for a long time. So there are a lot of things that could have happened for 10 years. You could have default. You could have canceled the card because the company could have canceled the card because you didn't use it responsibly. But if the card is still open and it's for long term, it shows positively on your credit report. So closing it will not do you justice.
Okay, so keep it open. Okay, great. Thank you.
Sure.
So I have a quick question before we leave that topic. Closing it will not do you justice because it's not going to help your score to show that longevity. But
that's exactly.
Will it actually negatively impact? Like, will it take points off of your credit score?
Again, it will. It will to an extent, because again, there are all factors, because I don't want to say just that particular behavior and neglect all the other factors. Now, if it's helping having it on, taking it off, it's gonna hurt.
Mhm.
So I don't know how big of a hurt it will be, because again, we have to, we can't just neglect the other factors that could hurt your credit score. But keeping it impact your score positively. Closing it, it does, but I don't know how much.
Okay.
I don't know if that answers your question. So
Yeah.
the advice is to keep it.
Yeah, it does. And I understand it might depend on the credit card company as well. It's just when you have those cards that have the annual fee,
Mm-hmm.
like, and then you have some that don't have an annual fee, you kind of want to get rid of the annual fees.
Very good. Yeah, great insight, Christina, because you don't want to keep on paying. Now, if your credit is healthy, you have 6, 7, 5 credit cards that you've been very responsible with, and you have some of them that give you perks, some of them that just hurt you on an annual basis. You will know, and with all the factors are positive, you will know if closing it will do something negative on your credit. Most of the time, again, with all the factors are staying positive. If a card is $120 a year keep, and you have 5 other cards that are just with high balances and that you've been responsible with, sometimes closing it might be beneficial to you, because obviously you don't want to pay the 120. But if that's the only card that you have, or you have very few cards, and then you decide to close the one that you've been with for the last 15 years, I don't suggest that as a positive thing. You could call the company and say, hey, I've been with you for 15 years. I want to increase my limits. I want a better card, where they could do a soft inquiry, or they could just extend another card to you where you close it. You could call the company and just make an arrangement. But more importantly, you will know how good your credit health is before you make that decision.
Great. And Spencer, I think you might have answered this question, but there's 2 related questions in the chat. Can you have too many lines of credit? Is it best to limit how many credit cards you have at one time, even if they have a 0 balance? And also, is there a desired number of credit cards that people should keep?
Good question. Desired number. Well, again, it depends on where you at what stage you're at with your credit history. If you are a beginner, the worst thing you want to do is to just go apply for cards, because it's not helping you, because there's something that could inquiries that could impact you negatively. If you're a seasoned person with so many, with great credit history, and you've been paying your cards on time, and everything looks great on paper, having something that you're not using and then you don't need does not help you at all. So if you have good credit health, and then you close down a line of credit that you don't need, it's not going to impact you as much. But there's another thing that I can say. The bank reserves the right. If I give you a line of credit of $100,000, for instance, and then there are some stipulation within the contract of giving to you, the lending contract, that says, if you don't use this line of credit, I reserve the right to close it myself. I don't know if you guys are aware of that. So the bank might say, if this line has not been used for 12 months or a year, or 2 years, the bank can send you a letter and say, hey, you're not using this $100,000. We're going to close this particular, without you requesting for it to close.
That's interesting. I didn't know that.
Okay, without you requesting for it to close. So that's also another thing. So having credit, the rule of thumb is, if you have it on your credit report, if you can use it once a quarter to keep it going and pay it off, especially in line of credit, that's the best way to use that line of credit. That's the best way it's going to impact positively in your credit report. Not using it at all, again, you could close it if you want. If your credit health is pretty good, you could keep it, but the bank also reserves the right to just shut it down if you're not using it. So but you never know when you might need that $100,000. You never know when you're might need that $15,000. The rule of thumb, again, even if you might not have a need for it, but if you have money in the bank, why use the money in the bank when you can use the line of credit for, maybe 10% of it, and know that once after I use it, I could pay it off within that same month or within 40 days, and so that I could keep the activity to help me. And also I could keep, the line of credit for it not to go to a point where the bank might feel like they could close it. So that's another thing.
Right. Yeah, good, very good point. And as a business owner, I know that because I did have a line of credit and I wasn't using it and just closed it. But then when I needed it, you know what I mean? It wasn't there.
Exactly.
So, and how do you close an unused credit card? I would guess you just contact the company.
Yeah, you just call the company and say, hey, I don't have a need for this particular card. So just, I would like for it to close. And obviously they will just do that. They can't keep it open if you want it to close. So just go with the slide right here, credit score, a number that helps lenders determine your credit risk. Obviously, there are different types of credit score. We're going to go on the next slide, talks about it, but there are FICO and Vantage. Primary method used to access credit, score range from 300 to 850. That is the FICO score. Obviously, this is important. This is extremely important that the score is based on past payment history, 35%, outstanding debt, 30%, how long you have had credit, 15%. We talked about that earlier. New application for credit, 10%. Types of credit, 10%. So you can see the largest percentage is payment history. Again, from the example that I gave earlier with the sofa, if you borrow money from someone or a bank, I should say, you got to own your obligation. You got to own the responsibility of paying that debt. That's what helps your credit score mostly, the payment history. If you say you're going to pay on the 30th, you pay on the 30th. Even if you can't pay the full balance, pay at least the minimum. Because the minute you show that you're missing payment, you see how heavy it could impact your credit score. Outstanding debt. So that's the one that I mentioned earlier. If you have $1,000, there's something called debt to limit ratio. You don't want to go and spend the whole $1,000 and then keep the $1,000 for 6 months and pay just the minimum. That's not helping your credit. Actually, that's hurting the outstanding debt percentage because it's showing that you're living off credit. You don't have the ability to pay off balances or to bring the balance down to a point that it shows that, hey, you're using credit as leverage, not as a means for you to live. So that's important right here, the outstanding debt. So if you have a card with $1,000, make sure that, every month you could bring that balance at least 30% or lower so that you can report positively on that particular column, which is outstanding debt. How long you have had credit, we talked about that. You don't want to close your old cards, and because they report on your credit as a long time relationship. New applications for credit that fall under inquiries. The rule of thumb is that you don't want to have more than 4 inquiries in your credit report at one time, because inquiries do last for 2 years, and if it's hard inquiry, I believe somebody did ask the question between soft and hard. It does not, help your credit. It hurts your credit. It shows that you're seeking for money for a particular reason, and you keep on getting declined for a particular reason. All that basically doesn't help. So if you know your credit you don't have a good credit health, one thing I will say is to get it to where you need it to be. Do what you need to do instead of keep on applying and getting inquiries, because it doesn't help your credit. That's 10% of that. And
Yeah.
types of credit, we'll talk about that later. Revolving, loans, home, those type of things. Next slide. The Vantage score is a new credit scoring system. We don't have to go over that. It explains itself. Score range 501 to 990. In groups between A, B, C, D tells you the health of your credit. Obviously, F is the worst, A is the greatest, is the best. Next slide. Good and bad credit score. The higher, obviously, this is simple. The higher your credit score, the more likely you are to get a better interest rate and pay less for borrowing money. That's actually if they show you the difference, somebody who go and get a loan with great credit score and somebody who go get a loan with a bad credit score, the difference in the dollar amount that they pay, it's mind-boggling. It's like, whoa. So good credit helps you save money. in the long run. Compare, just think about it. Compare 6% interest rate versus a 2.5. And just think about it doing that, for 30 years or 15 years. So in the long run, good credit help you save money.
Yeah, and I think people get caught up with that, Spencer, because they go to these places that are not as reputable as they should be, and say anyone can get credit here. You can get credit, but it's going to be at an awful rate.
Oh man, it's going to be a higher cost. You're probably going to cry when you start seeing that, hey, this is how much money the bank is making off you, or the credit card company is making off you. Because I know somebody who made a bad decision to go get a car, and the car was at that 19% interest rate. Yeah, you get the car that you want, but you're paying a monthly. You have a monthly obligation, let's say $600-700, and off that $600-700, a good $350 is just, or $400 is just interest you're paying. So it's you got to be very, you have to educate yourself to know, is that a good purchase? Because the bank and the credit card company is in the business of interest rate. Right. The higher they could charge you, the better it is. The longer you keep the debt, the better it is. Because you buy a car, you depreciate in value the minute you walk off the lot. So it's important to know having good credit score help you save money. And important, review your credit report regularly to ensure accuracy of information. That is extremely important, because these agencies, Experience, Equifax, and TransUnion, they're not in the business to help you. They're in the business of reporting, and not everything they report is accurate. Even address can make a difference. Sometimes if you look at in your credit report, it says you used to live some place that you don't even know where that place is. Just having that deleted can help your score. So it might not even be transaction. It could just be information that they just get from whatever they get, and they put it in there, and then you just say, okay, whatever. You never really look at your credit. Next thing you know, something inside of credit is hurting you from being fair to good. Is helping you from 680 to a 705, or 690 to a 700 because of inaccurate information. So that's extremely important to do that. Inquiries, we talked about that before. Somebody asked the question, soft, hard checks. Voluntary inquiries, what is that? That's me going and looking for loans. I'm going and asking, hey, please run my credit. I give you and consent that you could do that so that I could make this particular purchase. That's a hard inquiry. Involuntary inquiry is basically your credit is good, and they basically looking for you to do business with you. So I didn't ask you to pull up my credit, but you want to offer me XYZ because you think I'll be a good client. That's a soft inquiry. Excessive inquiry is when you going to different car dealership and then just say, pull my credit, pull my credit, pull my credit. And then you do that for 1 month. Next month, you go and do it again. You're really hurting your score. You're really hurting that 10%. That inquiries has to do with your full credit health. Inquiries when rate shopping. Some people have extremely great credit and they decide, hey, you know what, I want to get the best rate. And how I do that is by going to the place that I know will give me the best rate. So even for 1 basis point, I'd rather to, go to the place that could save me that particular money, and then I know and do the inquiry to help me get the best rate or the best perks or whatever that is. I hope that answered the question for the individual who asked for soft versus hard.
Yes, thank you.
Thank you. Other factors influencing lenders. What other factors might influence the lender decision to make a loan besides your credit report and credit history? This one is extremely important. Sometimes you could have the best credit score, but you're going to purchase a home and you really see a home that you love. Let's say the home is $500,000. And you do have the best credit to get it, but you only make $50,000 a year. So the bank applauds you for having a great credit score, but they look at the home that you want to purchase. You can't, buy this home because you don't make enough. So sometimes it's not just the credit. Your income plays a factor as well. Length of residency also plays a factor as well. how long you've been living in that particular home or that particular house or location. And employment, obviously, we talked about that earlier. Any questions on that one?
Yeah, just one quick question. Can you find out who is pulling your inquiries?
Who's pulling your
credit report? Mm-hmm.
Oh, there's so many ways you could do that. I mean, I have LifeLock on my credit report. There are so many things that you could pay every time there's something that happened in your credit. Automatically it sends you a text or an email. So you could pay for those things, or you could, there are some out there that are free. But yeah, there are ways for you to know it. Whatever happened to your credit, the minute it occurs, you get an alert. I mean, because I pay for it, so I don't want to share what it is, because I'm not endorsing or but there are so many ways that you could find out what's going on with your credit.
Awesome, thank you.
At the second that if anything occurred. This one, opting in or opting out, I gave that example already. For some of us are privy to have excellent credit. And once you have excellent credit, all type of credit companies and agencies gonna want to do business with you. And then you're gonna get those calls, those offers all day, every day. So you could call that number and say, hey, I don't want to get all these calls and offers, and then you could opt out of receiving those calls. Request your credit score. Receive a copy of your credit score from credit report agencies, companies that want to sell your credit score as part of a package of products. Receive a free credit report. We're going to talk about that once every 12 months. When you apply for consumer loan secured by your personal dwelling. So next is going to tell you how you could get and where you could get your credit report. Next slide. Annual credit report.org. .com is an agency that allows you, that backed up by the government, that allows you to get your annual credit report every 12 months for free. I think because of COVID, I think you could do it, as much as you can now, and where there's no restriction. But once a year, you could get that in a normal time, using www.annualcreditreport.com. It's free of charge. These scenarios, we're not going to go over them, unfortunately, because we're not, face to face. But I think go back a little bit. Yeah, simple credit report. So what's in it? This is just a view of what your credit report could look like when you pull it. What type of information that's going to have, potential negative items, your personal information, the loans and the credit cards that you have. So this is basically how it looks like. You could move forward. Checking for errors. It is your responsibility to contact the credit report agency, write a letter, dispute the errors. Credit reporting agency must conduct an investigation within 30 days of receiving your letter. Now, this is important. Now, let's say you pull up your credit and then you see a lot of stuff that you like, when in the world did I apply for this? Why is this showing on my credit? We don't live in a perfect world where, everything, everybody are nice. Everybody, we live in a world that people just, look for individual to do fraud. So what's important is that you always have to find a way to look at your credit. I'll do it on a monthly basis. Just look at it, and so that I know what's in there, what's reporting in there is, they're accurate. So it's important for you to do that, because if you see something, an error in there, you as a consumer have the right to write a letter to the agency and say, hey, I don't understand this. I don't know this particular debt. Why is this address showing? And they have 30 days to answer you. And if they don't, if they don't answer you, they will answer you. But if they can't find if it's right or wrong, they'll have to take it off the credit report. Any questions on this particular topic?
I didn't realize that. So if they cannot find how it got on the report, they have to take it off. Is that what you're saying?
Yes, they have to. Mm-hmm. So, but you can't do that by calling them. The way to do it is by writing them correspondence. And then there are ways, there are letters that there are code, like according to credit agents, report agency of act of this section, it shows XYZ on my credit. I have no knowledge of this particular creditor. Please show me, investigate on where and how, the original, whatever. The letter has some verbiage on it, and then they will know that you mean business, and then for them to basically go right ahead and investigate and go and find out how you got there, because they don't want to be in trouble themselves as well. Because they are in the.
I'm sorry, it could be a situation of identity theft, which we'll talk about later in the month.
Which is actually next slide, I think, one of the next slides. You see right here. Minimize real risk of identity theft. Very important, extremely important. Because like I said, you are a nice person, but the next person to you might not be nice. So you have to make sure that you protect these things, protect your personal information, your social security, your PIN, your passcode, your credit cards, protect your income and outgoing mail. Sign up for direct deposit, make it a lot easier for you so you don't have a check going into your mail. Keep your financial trash clean. Keep an eye on your bank statement and credit cards, because this, if you don't do the due diligence, you might be a victim. Because if you just let everything go and you're very sloppy on how you handle your finance, you're very sloppy on what you do with your information, the next person, like I said to you, might see an opportunity to do something that, negatively to you. And then there you go, you have identity theft, and you don't want to go through that process as well. I remember I used to live in Brooklyn, New York. There was where I used to live, I guess there was very high theft crime. And I was part of identity theft where people find my information and they applied for cards. They made fraudulent checks. It was nightmare for a whole year to clean my name. So it's extremely important. I know how it feels to go through that process. But eventually I know, obviously, thank God my credit is good now. Things go get back to where it needs to be, but it's not a good process at all. It made me be a little bit more anxious of everything. Like, I don't leave my card places, even ordering pizza. I won't do it with my debit card. I only do it with the credit card, things like that. So it's important to be on the lookout for that.
Interesting.
Minimize your risk of identity theft. Avoid identity theft on the internet. Review your credit record annually and report fraudulent activity. There's information we source from the Federal Trade Commission that you could call, and if you feel you're experiencing identity theft. This is same information. Take action immediately. File a police report. Contact your creditors. Follow up in writing. File a complaint, and ask verification that dispute accounts have been closed and fraudulent. Those are information that you could have. By the way, I'm going to send to Elizabeth the participation guide, which has all these information. So I think she will definitely forward that to you if you have any questions or concern, or you want to refer back to the deck.
Definitely. Thank you, Spencer.
Victims of identity theft. Place a fraud alert on your credit file. Initial fraud alert 90 days, extend fraud alert 7 years. So these are the things that if you're a victim of identity theft that you can get from the credit bureau, or that they will give to you for free. Because you don't have to pay for, or you could pay for, LifeLock or anything like that, just to help you with that so that you don't have the same experience again. Next slide. Building your credit history. Very important. If you're part of the first category where you're new with credit, the way you could do it: apply for a small bank loan, apply for credit at local store, make large down payments, and negotiate credit payments. Ask a friend or relative to co-sign a loan for you, which we talked about earlier. Pay your bills on time. Ask lenders to review utility or other bills to grant you credit. That's actually something that is very important. A lot of the bills that we pay that normally will not report to your credit, there's a way now you could have it report, where the lenders have a program where, the utility or whatever bill that it is that normally don't report to credit bureau where they have a way to report them now. So things that, you know, your utility bill, your cell phone bill. I know Experian has a way where if you pay something every month, let's say I have my phone bill report and my credit report, my gas report and my credit report. But to Experian, they have a way to, it's called Experian Boost, where you could include all these things. And after 90 days, you start seeing them report positively on your credit report. Those are bills that we don't have no choice to pay. You know, I don't know anybody, you know, who go to a month without a cell phone because they couldn't pay the bill. We will find ways to pay our cell phone bill. So it's extremely important if you could have that report positively on your credit to build your credit. You know, it will be a smart thing to do. And I have that, my phone, my gas, my electricity, even now your rent, depending on the landlord or the organization that you pay your rent, they have a way where they can actually report, I think for a small fee of $6, they can report your monthly rent under a different account on your credit report. It will show that you pay a particular account every month on time. And people, like, you know, have to pay their rent. So that's a way to build your credit as well. To repair your credit, first thing you have to do is get a copy of your credit, because if you don't, you won't know what's in there if you don't have the credit report. Contact the credit report agency and creditors to report errors that we talked about. Consider opting out of unsolicited offers to credit to avoid getting into more debt. These things are just interview several companies before signing a contract. Be sure they are reputable, as we talked about earlier. Ask questions about service fees and stuff like that. Credit report scams. No, these are very important, because in your journey to fix your credit, you will get a lot of organizations or for-profit or non-for-profit organizations that say, I can help you. I can help you take this thing off your credit. I could help you clean your credit in 90 days. You don't want to fall into that, because normally it's for a fee, and your credit's gonna take time for you to get from bad credit to good credit. And some of those agencies give you false hope, because really no one can remove accurate information from your credit. If it's accurate, they can't remove it. You know, some of them will tell you, hey, I'll take the auto loan off from you. The repo, I'll take it off. I'll just argue it and take it off. But you know that you had the car and it was repossessed. It's your credit. So saying it's not my credit is not being truthful. And most of the time, they can't really get those things off. No one can create a new identity for you. So be aware of those type of scams. You know, they will have your name, but with different social, and then show you that, hey, I just give you a good credit score within like 60 days, but because you pay X amount, $5,000, but in reality, it's not your social. And then you become part of a whole scam. So you got to be very careful with that. You can order your credit report yourself, and there are ways that you could do it yourself. So I think that completes the deck. What final questions do you have? Anybody? Oh, let me see if I answered all the questions. Soft and hard, college students, mistakes. I think I'm missing one, which I didn't take a note of. Any questions? Any questions?
Let me just look back at the chat. I think finding out who's pulling inquiries, closing. Having too many lines of credit is not good, right?
No, having too many lines of credit is good. Like I said, it depends on your financial health. It depends on the credit health. Like I could have 6 lines of credit, but I'm using them respectfully and I'm paying them on time. It's, you know, I'm not maxing out a ball of 6, because that looks bad. That messed up the outstanding debt. As long as I stay within 10% and some instance 30% of that total line, then I'm fine. But you have to use it responsibly. If you do, then it helps a lot. If you don't, obviously it hurts, because it's 30% of your credit category.
Got it. Got it. All right. So we're back here now. So I think we got all of the questions in the chat. Spencer, this was eye-opening, to say the least. I learned a lot from this. So I do want to thank you for doing this presentation. We're actually 3 minutes before 11, so we got everything in. There's a lot of thank yous in the chat too. I don't want to forget to say that. People really appreciate your time and the information. And like Spencer said, I will send out the participants guide. There was also in the chat a thank you document. I will download that and send it around along with Spencer's contact information. Please do keep an eye open for the next workshop, which is on May 19th, same time frame, but you will all get notification of that. So thank you all very, very much for being here, for your participation, and for taking time out of your day to learn more about your credit history.
Thank you, Elizabeth. Thank you all for taking your time, and I appreciate it. Please leverage me as you can.
Okay, thank you, Spencer. Bye-bye, everybody.
Bye.